Hey everybody, it's hwsteele and today is August 20th, 2024, and in this video I want to talk to you about the US dollar crosspair daily chart and Gann's odds square chart, more commonly known as Gann's square of 9 chart. Before we get to that, let me go ahead and address the fact that I have not made a YouTube video in like 4 months here. The reason for that is I was making 1 to 2 videos a week and then I wound up injuring myself. It was back, neck, and shoulders injury. And I didn't really pay attention to it like I should have, and I wound up injuring it much more dramatically as a result of that. And it got to the point where it was just absolutely excruciating to sit down in my office chair and do anything in front of the computer. So I spent as little time in front of the computer as absolutely humanly possible for quite some time while it was healing up. And well, I got out of the habit of making the videos, and then after that, after I healed, my father came down for a visit from Minnesota. My youngest daughter graduated school, and summertime started happening. Responsibilities that come along with summertime started getting in the way, and it just got really easy not to make videos. So now that the muse has struck and I have a bit of extra time here and there, I'm going to start making the YouTube videos again. I will go back to some of the subject matters that I have been talking about earlier in this year, but I'm also going to sprinkle in some more of the, in quotes, more common, normal for me, esoteric stuff. But I will be going back and forth. There's just not going to be any specific release date. I'm not going to pressure myself to get them out 1, 2, or 3 a week or anything like that. So no guarantees how frequently it's going to be or what the subject matter is going to be specifically. So anyway, without further ado, now that all that's out of the way, let's go ahead and look at the Euro US dollar crosspair daily chart and use the square of 9, or really Gann's odds square chart with it. Now there's really going to be 2 parts to this video. The first part is going to be looking at whether or not the odds square chart will help us with anticipating possible changes in trends. And if we determine that it can help us in this market, then we're going to look at trying to read price action to figure out what we may or may not want to do with that information. So let's start here. This is, if we look here, this is 2024. And so we have the lowest point of the year so far, at least, is April 16th, 2024. So we'll just start counting from there. And we're going to measure from here all the way up to this top right here. And we're going to use bars or candles. In other words, we have 30 days, but instead we're going to use trading days. So we have 22 trading days. Now, instead of actually looking at the classic square of 9 chart, we're actually just going to do the math because that's pretty easy. We take the 22 days, we find the square root of that, which is 4.69. We add 2 to the square root, so now it becomes 6.69. And then we re-square it, and that gives us 45 rounded. So if we were looking at a square of 9 chart, we would see the number 22 on that chart, and one row or one shell out of that, right on the outside of where the 22 is, we would find the 45. Since the odds and even square chart that Gann used are really just square root calculators. Obviously, way back in the day, they didn't have calculators, digital calculators like we do. So they used things like square root calculators, like the square of 9, the odd, the even square chart, and slide rulers, things like that to help them so they didn't just have to do the math constantly themselves. So anyway, we measured 22. The next row out gives us 45. And so we're going to measure from here, the same starting point, and go 45 bars out. And we get down here in this bottoming formation here. But let's see what happens if we measure 45 from here, the termination point of our original count, or the high that we ended the count on, and go 45 bars out there. And we see that we land right here on this top. So initially, at least, it seems like we're getting better results for measuring a swing and then using our square of 9 calculations, really just square root calculations, and starting our new count from this point, the termination point of our original count. So let's look at if we measure from this low all the way up to this high right here. We see that it's 35 bars. So let's do 35 square root plus 2 and then re-square. That gives us 63 rounded. So we'll measure 63 into the future here. And we see that that literally actually takes us into the future from when we're making our calculations here. In other words, the day I'm recording this video, August 20th. Now something that's just a side note, that's nothing, I'm not trying to point this out and going, look at this. I just want to make a note of the fact that when we measured from here and then did our calculations, we came to this top right here. But measuring from this low to the ultimate top, or the final top of this move up right here, and then doing our square root calculations, we come out to a point in the future, but the halfway point just happens to land right at the same place. That's pretty interesting, I think. So now let's measure from this top. Since we don't know what happens in the future yet, let's measure from this top down to this bottom right here, which is 16 bars. We don't even need to bring the calculator up because the square root of 16 is 4. We add 2 to 4, which gives us 6, and squaring 6 gives us 36. So we'll go 36 into the future, which lands us right here on this retracement right here. So clearly there's definitely some sort of correlation going on with United States, or I should say the Euro United States dollar one-day chart, the daily chart, and measuring the swings and then using the odds square chart. Really it's the odds and the even square chart do the same calculations. It's just that the charts themselves are laid out a little bit differently. Regardless of that, the calculations are the same, which are measure it, find the square root, add 2 to that square root, and then re-square, gives you a new number, and then we use that new number and count from the termination point of our original measurement. Pretty simple. And you'll notice that the reason I picked the Euro US dollar to test for this particular video is because I stopped making videos right around when the low happened in this market. So I was looking at this chart today and I was like, oh, you know what? That happened right about the same time. I'm just going to go ahead and make a video really quickly. So let's look at this again. And we're going to do the same measurements again. We're going to go 22 square root plus 2 re-square gives us 45. We go 45 into the future. Takes us right here, 45 days. And now, what do we want to do with this trade right here? Well, how would we read the market at this point in time? This is what I would be looking at if I saw this. If I was like, okay, this is my timing method that I'm going to use, and time has run out at this point, what has the market done? The market's been in an uptrend, a minor uptrend, in this larger uptrend. It's made a new high that's been slightly higher than this high, but it's still lower than this high up here, way over here. So if the market breaks down below these top levels right here, below this right here, you see how this candle moves up and then it comes right back down, and there's a little bit of a consolidation right here at this level that just happens to coincide with the top of the market over at this level and really over here. If the market breaks down below that, my anticipation would be that this particular swing right here would be retraced about 50%. And we see that it makes it a little bit past 50%, but that's what my initial assumption would be. In other words, just put simply, time ran out, and I'm assuming that if the market can break below this level of resistance, that it's going to go somewhere around here, which kind of is right below this little level of resistance, which coincides with this level of resistance and is right about equal with the bottom right here. See that? So I'm looking at several things. I'm looking at the move right here. I'm measuring this and finding the 50% of that. In fact, let me just go ahead and put that back up right there. So there's the 50% level, but that 50% level coincides with resistance, support, resistance. So in other words, that 50% level makes sense that the market would get to that and then continue to the upside if we're still going to stay in an uptrend, which clearly, looking with hindsight, we did. So now I would measure this one, but we already know that it goes into the future, so that won't do us any good for testing. So we have the 16 bars, which gives us the 36 bars. After we do our math, 36 bars comes out right here on this one right here. So what do? The same thing we just did over here. The market's been in an uptrend. It trended up, it consolidated down. It trended up here and consolidated down, broke above that. So basically, it broke into a new high, consolidated right at this top area right here, and then moved higher. Now, I will take note of the fact that there's been shorter periods of time that the market's moving up here. And obviously, this is in the future of the point in time we're at. But regardless, what I'm seeing here is that the momentum seems to be running out, but we're still in an uptrend. So I need this move down here to break below. See how we have a high here? We have a high here. We have the wick is really long right here. So this really gives us a zone. Let me delete this. I'm going to put a zone in there. You remember how in the previous videos I talked about price zones? So I need the market to break down below this level to have confidence that it's going to continue lower. If I think this might be, time ran out, it might be the end of the move up, but I need it to break down here to have significant confidence in the fact that it's doing that, because right now it's at this level right here. You see this? This is resistance right here, but since we've moved above that level, it's now support, and we have it here and we have it here right here. So it's sitting, it broke above that, and it's going to be sitting on top of that if it doesn't break out, and if it doesn't break out to the downside. So it's either going to do what it eventually did, which is continue to the upside, or it's going to break down here. But I really want to wait and see what happens. Even though time ran out and I know something's going to happen, I'm just waiting to see what happens. And obviously, in hindsight, it's very easy to see what happened. It just sat on the support level and then moved to the upside. And then once it broke above this candle right here, I was like, okay, I'm pretty sure it's going up. And sure enough, it's going up. So do you see how we're looking at the market? In other words, we made forecasts in time, and that's great. We used the square of 9 or the square root calculations, because there's definitely a correlation with this market and those calculations to show us points in the market where the trend changes. But when we get to that point in time, we need to be able to read the price chart to determine whether or not we really want to get into a trade with that possible change in trend. And right here, we found the market broke below our support level, and so we traded it down, or theoretically could have traded it down to around the 50% point, which is what happened. It moved down 50% of this move up here. And obviously it could have moved down more or whatever, but the 50% level is the first go-to level, especially when it coincides with these other price levels over here. And then this one right here, we wait, we see, is it going to break down? No, it doesn't break down like this one did. It breaks to the upside. So how far is it going to go to the upside? Well, we don't know necessarily with what we've done with the time forecasting, but we can just do a simple 1, 2, 3 and assume that it's going to go at least this high. And it, see how that 1, 2, 3 gives us price projection right here to about where we're at right now. We could also see, that's the first level, we could also see that maybe coming down here, going up, it gives us a price projection that's way up here. So there's different possibilities just using 1, 2, 3 patterns right there. But anyway, the whole point of this video was to start making videos again, get back, knock the rust off my brain here, get back into the swing of making videos, and look at a time forecasting methodology that definitely has a correlation with this market, the United States, or the Euro US dollar, 1-day chart. And then look at the market's price action when those points in time come, because it's really fun to look at the different methods of forecasting the market, whether it be price forecasting or time forecasting. But even though that's fun, you really need to start developing the skill set to read the price chart and see what you do or don't need to be doing. You don't need to just jump in because the time has run out. That doesn't really mean anything if price doesn't do what you're hoping it does at that point in time. So anyway, I'm going to stop talking now. Until next time, which I'm not really sure when that's going to be, hopefully by the end of the week, but you never know. It might be not till next week, but I will do a new video and I'll talk to you in that video. Have a good week.